time, the business which I took for about 90 lakhs kind of annual run rate brokerage income, 2003, 2007-8, I ended that year with 110 crore of profits. Our first initial public offering that we launched has to its record 24-25 till date highest oversubscription 201 times. But when the things settled down, and at that time the skill and art of selecting the right horse to back or the right business model and management to back becomes most critical. But when India is also touched almost 140-150% market cap to GDP, I would think that that's also a sign we need to take it. So caution at this juncture and sticking to quality, back to quality. By 2028, 29 or maybe 30, we want to be at least $1.5 billion organization.
Welcome to the India Opportunity Podcast. Hello and welcome everyone to the India Opportunity Show, where we bring you insightful conversations with the brightest minds shaping India's business landscape. I'm excited to introduce a true leader in India's financial services sector, a trailblazer with over 35 years of experience, Ms. Amisha Vora. Amisha is the Chairperson and Managing Director of PL Capital Group, one of India's most respected financial service organizations. Her journey with PL Capital began in 2000, and since then, she has not only grown the business exponentially, but has also taken the firm to new heights by diversifying its offering across investment banking, portfolio management, and more. With numerous prestigious awards under her belt, including being featured on the cover of Fortune's Most Powerful Women in Business, Amisha is widely recognized for her vision, leadership, and her deep belief in India's multi-decadal growth story. In this episode, we'll dive into Amisha's incredible career, her perspective on the future of financial services in India, and the leadership principles that have guided her journey. Let's get started. Hi, Amisha. Welcome to the India Opportunity Show. Thank you for making time for this. It's a pleasure to host you.
It's absolutely my pleasure too. You've been doing a wonderful work.
Thank you so much, Amisha. Amisha, you've had an illustrious career spanning over 35 years in the financial services sector. Can you take us back to your early days? What initially attracted you to equity markets, and how did your background as a chartered accountant shape your approach to finance?
So you know what? I finished my CA. Those days it was possible to do it along with graduation. So by the time I was 21, I was a chartered accountant. And those days, the decision to some extent as to where do I join was, of course, with my father. And he thought that finance field, and particularly JM Financial, where I started my career as a research analyst, is a very safe firm, our family relation firm. So I can probably send my daughter there. And I'll end up on the first day was a budget day. And as you know, market looks at budget, tears it, and looks at every single detail to know what financial repercussions it has on economy and ultimately in markets. And as I start my career on such an important day, the only answer when they asked my opinion that I had to give was, give me some time. I need to really understand this. This is where actually I started my career being in the financial markets.
That's amazing. And just let me ask you here, what is your reaction on budget days now, given that you started your career on such an auspicious day? Do you have a special feeling when the budget is getting announced or discussed in the parliament?
But, since then, each and every year that I would have listened to the budget to the T. And over the years, of course, understood that yes, this is one more event in the market's journey for the year, but it has the power to reflect what mindset with which, our country is managed. And so the short term, but more importantly, the long term outlook is what we look at from the budget. But yes, it has a good memory value for me Then now I'm invited on all
And
the channels to give my opinion on budget.
that's amazing. What a fantastic journey it's been so far. But in the year 2000, you joined PL Capital as the VP of FII sales. And within 6 years, you grew the institutional business 36 fold. What were the key strategies you implemented that contributed to such explosive growth? And were there any challenges you had to overcome?
Of course, I had big challenges. If anybody who knows what was the market period that time, market had a huge Indian crisis because of the very well-known, they say Ketan Parekh crisis, and the whole Badla system which was on in the market were shut, and we were moving over to futures, and the liquidity in the markets had collapsed. Same time in US, there was the 9/11 event and the world markets had collapsed. So the businesses were substantially down at PL. Which I entered to do the business for only FII desk and develop it and grow it. And as the turn of event happened, I had to take the reins of the entire institutional business. But I mean, this is how my style is, that I go into the shoes or in the minds of whom I'm talking to in terms of my clients and how their decision making can be helped to help them generate money making ideas or create wealth for clients. And that's how I started with the idea of conferences. So, wherever I thought that the sector is turning around and then a lot of money can be made, I initiated getting all the industry stalwarts under one place, which is what we call conference, which is now very common, and invite all the
Yeah.
global and domestic fund managers. This is what started really, getting appreciated hugely. But beyond that, I started creating a lot of corporate contacts as a firm
Yeah.
and as a team and as an individual. And that then continuously kept resulting into more and more business and revenue. Of course, those days I used to travel like if somebody can call me in US, one of my clients, I'm ready to meet. I will pack a bag tonight and go. That's the kind of
Wow.
passion and agility and interest was there. So that really helped us a lot.
That's so amazing. Tell us about that time a little bit more because, our audience is the younger generation and they might not have such vivid memories of that time. But, since we in the markets, we are always monitoring FII flows into the market on a daily basis, right? And sometimes when you look at it, when a crisis like 9/11 happens, obviously the FIIs and FII inflows into different countries can be severely impacted. So obviously it must have required a lot of resilience to be able to deal with that kind of volatility in the market and the sentiment as well. So what was the mindset at that point? Or you must have emerged out of it very strong, and that must have taught you real leadership lessons at that point. But what were some of the things that were going on in your head at that time?
So to be very frank, at I was by then at Prabhudas Ladar and was mandated to look at their FII desk. But as I saw the way broad economics at Prabhudas Ladar was turning out based on the basis this crisis, I voluntarily took an initiative. Our revenues had come down to 4% from 100 rupees to 4 rupees. That was the kind of
Wow.
collapse which happened on volumes, both because of global crisis and domestic crisis. The volumes only shrunk, and we were a huge team. Even those days, we had all the IITs, IIMs as our research analysts and our sales side, and a lot of foreign Asian brokerages who had come to India were also shutting. So then I took that initiative to call my entire team that we have two options. Either if we continue to bleed like this, of course, this division will be shut, like so many are getting shut. But if we stand together in this difficult time, anyway, when the things turn, competition would have been less. I
Yeah.
announced a 70% cut in my salary. And I told them, you decide what you can bring on the table. And everybody then just thought that, yes, this is the wiser way to tide over. And then I went to that time the promoters and said that you give me 1 year, I'll make sure you don't make lose money, but give me, let's arrive at something whereby I can keep the team together. So in a good time, give us so and so percentage sharing. And that's how I kept the whole team. We were a team those days of 40 people just in institutions and dealing separate. So we kept the whole team together. That time, the business which I took for about 90 lakhs kind of for annual run rate brokerage income, 2003, 2007, 8, I ended that year with 110 crore of profits. That's the kind
Oh,
of
wow.
turnaround which happened in the business. Of course, the firm benefited, the company and the team benefited, but we could really show a lot of strength being together and tide over during that bad markets. So that's a key learning that you have to be take all crisis as a real opportunity that gives you to weave together and look at with the same eyes. In good times, you have many more, you know, fritters around in your mind, but when it is bedtime, your focus improves.
That's such great advice to share with our viewers. But tell us this, in 2006, you became joint MD and acquired 24% stake. And today you hold 96% of the stake. What prompted you to increase your stake over time? Was there a particular vision for PL Capital that you believe that only you could lead?
No, I don't believe that only I can lead, but um, PL being extremely well known and respected for the core values of trust, integrity, and transparency. So I was very well aware that this is an excellent platform, a national brand, where I have, of course, put in almost 2 decades of my career. And post this success in, institutional broking and investment banking, I spearheaded many expansions within the financial services business. Uh, and then we were almost a full service house. But some of my other partners were in the mood to hang their boots because of their age. They probably would have loved to sell, and they were in the mood to sell. And that's the time when I thought that India's time will be like never before now. And if I muster this courage to take over the entire platform and give it that little more speed, little more wings, and little more empowerment to my team, I think we can do wonders. With that thought, it took me quite some time to, of course, uh, collect the required capital, take all the permissions because it needs for me permissions from SEBI, BSE, NSE, IRDA, RBI. It's a long process of, and all the banks had to support me because we use large banking lines. We were four partners, four personal guarantees. So to come to one individual and that to a lady, and I was very firm that I will give all the guarantees, but not my husband. Not for any other reason, but I'm the one who's bringing this experience on the table. So this has to be done this way. It took me some time, but I'm very happy that I mustered this courage and took this decision.
What a fascinating story. I don't think a lot of people really know this outside of the walls of PL Capital, but today a lot of people will get to know how you built your stake in the company. But tell us this, launching new verticals is something different, which we'll talk about as well. But, to be an employee at a company and then grow into being a founder of the company, or being, the person who's leading it and is in charge. There's so much said about being in founder mode, and professionals can't grow businesses the way founders can, and there's a whole debate happening in today's day and time in the tech world, right? But you have shown that it's possible to be an outsider, grow into an insider, and then lead a company and take it there. So obviously not many people think like that, because everyone thinks that we should start our own businesses from scratch. But as the benefits that you mentioned, that there were many advantages that came with the brand, which is what incentivized you to take it forward. How do you get this drive? How do you get this entrepreneurial drive to be able to do that kind of bold, to take such a bold decision and step at the end of the day?
So I'll tell you that, even when I joined this organization and I was playing different roles, I frankly never felt that I'm an employee. Otherwise, in the financial market, if you see people keep changing jobs every 2, 3 years for
Yeah.
increments, this, that. And I always thought that by going and looking into any such thoughts and thinking is wasting my very precious time, which I can focus on doing what I am doing. So I never really looked at some of those options for growth. My clear focus for growth was to be the best that I can bring to my clients, be it institutional clients, be it family offices and HNI. As my role kept expanding, I started overseeing many businesses here. And that's where I continued to focus. Second important thing which I feel and I would like most to know is that entrepreneurship is all about having ability to listen to your guts.
Yeah.
Nobody can guide you, frankly, because nobody has seen tomorrow. What risks, what challenges, what opportunities will come, nobody knows. People can give you advice, but it is finally your own gut which gives you ability to take decisions. So even while I would have not as MD, but worked as say a director of sales, and I was giving advice to institutional clients, I wouldn't go by what street is thinking, what so and so is thinking. I would do my reading, I would do my homework, take decisions. So difference between an entrepreneur and I respect, because my whole company is of professionals and I have been professional, but that combo is that the ability to take those decisions and calculated risks. And I think that that is a big differentiator. So while I had to take this decision, I was also thinking that probably it would have been lovely to do maybe a decade before than now, as I would have had a longer run, maybe more energy. But I do realize, and also all the kind of challenges that I would face, I knew in terms of course, we are a 600 people team to continue to have, apart from all bankers, my team to retain was also equally important. All different partners were looking at it. But I'll tell you very interestingly, I went for my Everest base camp,
Wow.
and and uh, amongst within my such busy schedule, whatever I could prepare, I prepared. You know, and last 3 days there were like real challenge. I was putting every step on a place underneath was complete those snow crackers. So any moment what would slip, I was not aware. And that those 2, 3 days gave me so much focus. It is beyond meditation, I would say. And also gave me so much courage that if I can take this risk, what is there in business? Because I've been doing it for so many years. And that just
Yeah.
gave me complete clarity that I need to get just two things: listen to myself and focus. So
Those
that
are
really
really
made a
powerful
huge
lessons for
difference to me.
anyone. Yeah, absolutely. To be at such a life-threatening event and situation, and to be able to navigate that, I think once you've lived through that experience, you start feeling like you can live through anything.
Correct.
And that kind of transformation event that you brought back into your life must have given you a lot of focus and narrowed your interests as well in terms of growing the business and taking it forward in a very ambitious way compared to
Correct.
before. Since that happened, let's also talk about what the business was before you acquired it, and then afterwards, how many new verticals did you introduce? What were the verticals that you introduced, and what was some of the thought process behind introducing each vertical?
So, before I acquired, as I just explained, there was a time when the pre preparations were going on. So, the decision that I will be taking it over was clear in my mind, though there was a process time. And I was continuously thinking that when I meet any corporates, any management, and make evaluation of their businesses, I see what is the moat in the business. What is it that they are doing different? What is it that they are, addressing as a very big market opportunity? And there came the thoughts of starting our Quant team. Of course, I was very fortunate that my own son is highly educated, and he also, due to his own studies, realized that Quant is the way to go for investments, and India is still not there. While US, almost 35% of funds are managed in Quant
Yeah.
way. So I started that entire team, a bundle of absolute youngsters who are not those typical 20-25 years experienced analysts, but 2 to 3 years experienced, but mathematicians, statisticians, economists, Python developers, etc., and give them free hand. And to my absolute pleasure and surprise, they've come up with one of the best quant infrastructure in India. It took us about 2.5 years to develop how, and just for the sake of all the viewers, I would say that when we talk about quant, what we try to do is two things: remove the emotional biases and put the thinking process in terms of algos or models, and get the ability to backtest your decision making process through actual data. That's what the broadly quant way of working is. And
Yeah.
that has started bearing very good fruits for us. Before I took over our funds management business for 10 years, was at X amount in terms of corpus. I stopped that practice of active funds management. Within a year, we are 3x of the size of funds that we are managing, which we achieved in 10 years, and we are growing. And now it emboldens us to take many more steps within the funds management. That's one part which is seeded, which is innovative, and we think that it will give us legs for the next 10 years. Apart from that, I had many existing businesses. Uh, Most of the businesses I knew, but I know that the markets are going to just expand, and the same size of team cannot do justice to the opportunity which is available. So I aggressively hired senior professionals across my verticals, be it corporate advisory, investment banking, institutional equities, private wealth groups, and I hired across not only Bombay but India, and which is in the process. Third thing which I'm doing is also expanding, looking at the once again eyes of the clients, that how does that wealth management piece really fit. So I'm putting a lot of alternative asset management fund structures. We call it specialized deal structures. So, which is what I'm trying to expand the offerings and expand the same team size, but at the same time, try and create a moat which others take time to catch up with.
That's so fascinating because you are running multiple businesses under one brand. Whatever numbers you are comfortable sharing with the viewers, are there any numbers that you can put to each business vertical? And the second follow up would be, you mentioned that quant penetration in the US and Western markets is as high as 35-40%. And I think that number is really small for India, still around
It's
3 to
just about
5%.
1%. It's just about 1%,
Oh,
frankly.
oh, okay.
Yeah,
It's
it's
as low as
really, really
1%.
small.
Yeah. So, now with the advent of AI and technological progress, and, I come from the tech world where there's so much innovation that keeps happening. So, what do you see the evolution of this industry being? Is that the vertical that you're most bullish on?
Absolutely. We will be, all the initiatives that we are taking, having created this quant infrastructure. So, one of the key uses funds management. When people give their savings for growth, we have structures which help us decide which asset class to put the money in what proportion to put the money in, and also within the asset class, where to put the money.
Hmm.
We define it under many different sectors and market cap categories, right? But the same very infrastructure can power my wealth. So when my wealth managers go to client, if they don't want to put money entirely under our assets under management, but we can provide them insights as to why we think market is in what phase, so which asset class is preferred, and also give them a little back tested results that how it has worked. So now Quant will be powering our entire growth strategies, be it in the wealth, be it in the asset management side.
That's very interesting. And any numbers you want to share?
So last year was my first financial year, March 24. In terms of top line, we grew by about 59%. In terms of bottom line, we grew 320x because the base was low, but also that we, with the same team, the productivity fired. This year, till first 5 months, I think month over month we are growing at 30%. But on a YOY basis, we are growing at almost 75 to 80%. So this year, most likely, we will grow at, if possible, between 90 to 110% still at bottom line. And I'm very happy to share that, I just hired a team, and our first initial public offering that we launched has to its record 24-25 till date, highest oversubscription 201 times. And
Wow.
yes, over last 20 years, this is the eighth largest oversubscription of any IPO. So, it's very satisfying because I was always told that, you want to do so many things, you do one thing at a time. I said, no, these are all very related things. So, if you see at PL Capital, the distribution network is across all institutions, whether in India, US, or Asia, family offices, ultra HNI, and retail. So it's a complete distribution network that the this platform is able to bring on table, and the ability through research to identify the right set of promoters and businesses to back. So that that belief, when it is fructifying, I feel really satisfied.
That's those are some big numbers that you just spoke about. And I think when obviously what you have been able to achieve is that you've built an entire financial ecosystem for the client, where once they come to you, you can have multiple offerings to the same client. And that is how most successful businesses around the world are built. So I think more power to you as you continue on your mission. But you touched upon a couple of aspects which I wanted to dive deeper into. One on the IPO market, because I think Indian listings have never been more exciting than ever before. You can call it recency bias, or you can call it, just what is happening in the startup world right now, where so many listings happen. But even at the SME IPO level, I think there's a complete frenzy currently going on. And I think you and I also connected about a potential SME IPO. So this space is very heated up. So what do you have? What is your sense? What is your pulse on the sentiment on the ground? What is the future of Indian listings?
See, I think a need for a distinction in terms of differentiating management capability, differentiating business models and its robustness, and valuing accordingly. It is lost at the moment because a lot of money is chasing limited security at the moment.
Yeah.
But when the things settle down, as we call it, men and boys are separated. And at that time, the skill and art of selecting the right horse to back or the right business model and management to back becomes most critical. So it's
Yeah.
important to make a lot of money in the markets as by investing in SME, where it just doubles, triples in no time. But it is more important to see how much you really retain. Because in good times you make, and in a down cycle you lose. What is the net at the end of the day is very important for all retail new breed of investors to understand.
Yeah. Yeah, and because everyone's small cap portfolios are delivering 30-40% returns.
Correct.
So, I think the most new entrants in the market or the younger generation thinks that this is sustainable. But, you are someone who's lived through multiple market cycles. So please tell us a little bit more about how to think about market cycles, and where is currently India, according to you, in which market cycle?
So, large cap, when you see Nifty, it is at a nominal premium to a 10 years historic
Yeah.
valuations.
I think
Because you
everyone's large cap portfolios have underperformed, and a lot of people are
hugely,
actually moving money from large caps to small caps, thinking they
correct.
can outperform the market and
Correct,
index.
correct, absolutely. So when large cap earnings, particularly Nifty earnings, grew say 15% CAGR, even markets have grown close to. I mean, the Nifty has grown 15-16% CAGR over
Yeah,
last 5 years. But when you come to mid cap and small cap, earnings have grown 23-24%, markets have grown 35-40%, which means there is a re-rating which has happened in quite a good places. It is justified because the overall interest rate outlook, inflation outlook, when they are sober, it's the mid caps which do really well. Now that has made most of the corporate balance sheet very healthy because on one hand the businesses are growing, on the other hand, if you see because of this financialization of assets and this gush of flow into mutual funds or direct participation, a lot of promoters are able to raise money, so their balance sheets are quite healthy. Unlike last time when the balance sheets itself were fragile, which means there was huge debt, low equity, so any downturn, the business cannot take it. The
yeah,
balance sheets are very steady this time. But what can probably happen is that the earnings growth, which was there was some base impact, there was a bank recovery profits, all that is gone. Rural recovery is moderate. Capital goods, which is firing well, is valued very highly. So, in
Yeah.
most likely, markets will be in a consolidation phase. And what will douse this fire of everyday rising markets or stocks is the gush of fresh fundraising. There's a huge IPO pipeline. There's a huge QIP pipeline. So as the paper increases, there will be a little sobering of the markets. Or the other way, once again, is that today in the markets, why do we feel that if Siemens is valued at 70 times PE, a SME or a mid small cap cannot be valued at 70 times PE? You are just seeing the same sector or some same kind of a growth, but they have huge management bandwidth, technology. What does management bandwidth do? They navigate with technology changes, but the same for an SME or a small cap is not easy. So they can't be at the same multiple. Markets in this hurry is missing out on that. But that cannot remain like this for long. So some
Yeah.
people could be in for a rude surprise soon.
So
And that's
you're
when
saying
the
that there are corrections to be expected?
correct. When you don't deliver, which means that as we go forward, when you say a 70 multiple means what? Market expects that you will continue to grow at 30 times for next X number of years. But that's not
Yeah.
easy. When they can't deliver, there will be a correction. And those kind of things will start playing out. Overall market momentum will continue. Whom to back, that will become very important.
That's very interesting for you to share that, because I think you are echoing a voice of caution and reason for
Yeah.
the younger viewers who are so bullish on equities. I think that reflects in the retail participation numbers also that we're seeing in the markets. But let's talk about the IPO pricing, right? Because you said that oversubscription by 200 times, over 200 times. So if you really broadly think about it, because the number of assets or securities that are getting listed is fewer in number, right now there's so much demand for it that they end up raising much more than they wanted to. And so what do you think will be the future of IPO listings? And for younger people, should they be investing in IPOs, or looking at pre-IPO kind of opportunities, because that is a segment also which is attracting a lot of participation from the younger crowd?
There are two ways I would still try to reply to this. I also believe that equity is the best asset class because the monster of inflation is beaten consistently over decades only by equities as an asset class. Yeah, so
Yeah.
equity allocation, and that too much larger allocation at a younger age, is a must, it's a given. Now, you do it through either any professional advisory, mutual fund, or PMSL, then the ability to navigate increases. Do you invest some time to skill yourself to differentiate between a good and a average business or good and a average management or the valuation? Then it's worth it. But just you do hearsay, then that is luck that works sometime, that doesn't work sometime. So coming back to your pre-IPO and IPO, I would think that this will continue for some more time because the breadth of the market still continues to be really good.
Yeah.
And what can really disturb this juggernaut which is in play at this juncture could be some of the larger risk factors. So, geopolitical, we have seen everything coming, happening, we are steady. So, only thing in some political destabilization, if at all, which none of us are visualizing, happens, then the policy change can be a good, big factor. But I would still say that being in an illiquid stock definitely carries a huge risk. So to navigate this boom, you participate but allocate a particular portion of your uh, savings to illiquid, which is SME IPO, pre IPO, because we have seen times when private equity players had 7-year fund. Their fund time will get over, there is no IPO happening, correct? And then they had to sell those investments because IPOs are not happening. I don't think in a hurry that time is coming, but markets are cycles. So you have to manage your risk while looking for returns.
Yeah, but I think that is also happening in some ways in the private markets because, a lot of funds were raised between 2013 and 2015, at least the VC funds back then. A lot of them are being forced to push their portfolio companies for either strip sales or get listed. That is why we are seeing this boom in IPOs as well. And, sometimes that's why the pricing gets so affected, going from a private to a public company, which we've seen examples of recently as well. But at the valuations that tech companies end up listing at, we saw so many high profile names get listed. What are your thoughts on the pricing going from private markets to public markets? Any broad thoughts on pricing and how to think about valuations for these companies?
So if you see last 3 years cycle on how some of the first round of tech companies got listed, they got listed at frenzy valuation.
Yeah.
But as they came into public markets, the scan of profitability started looking at them. Not just the metrics that sometime in future you can become profitable, but what's happening now. But
Yeah.
that brought a lot of discipline to this large uh, organizations. They started looking inwards, they started looking at their models more closely. And as you see, after dipping almost 50, 60, 70% from their peak valuations, all of them worked hard to bring their models back to senses, and most of them have started doing really well because they had
Yeah.
already invested a lot of capital to gain a large market share and created distinctions for themselves. So now I think the system of these companies listing have become very robust. I don't see a uh, much bubble valuations while they are listing as of now. The bigger bubble is still in inefficiencies rather than just tech getting listed, which is in the process of getting profitable, but they have a huge
Right.
market size which they are addressing. So that I still think is in a very sensible zone.
Right. That's a very interesting insight. I think most of them have were badly hit, but have recovered and are doing really well.
Yes,
Zomato, in Point, and there are so many others as well.
correct.
But let's also talk about a fact which is affecting the entire markets, right? Where, usually when Warren Buffett starts building his cash book, which he has, he's been selling aggressively, he's sold his Apple stock, Bank of America stock, and so many others. And what's happening in India also is that the promoters are selling of some of these companies which
Absolutely.
stocks have rallied in. So the people who built the businesses or at the top of the game are selling right now, whereas retail people are investing heavily at this stage. So there is definitely a gap in the thinking behind the two audience sets. So what do you think is happening? Why are so many promoters selling? Why are we constantly hearing of promoter stakes being reduced across all listed companies?
So there are two takes on this. One is that when the markets are so good, most of the promoters who have invested over 2 to 3 decades in their businesses, and generally they have never got this opportunity to encash. Offer for
Yeah.
sale was just not thinkable about a decade back in India. And now
Yeah.
almost 30-40% of the money goes in terms of offer for sale by either a private equity or promoter themselves. And they're setting up their family offices. So if you see, except private equity money, which also gets regenerated into markets, even promoter money is coming in some form across asset classes into markets only because they build up their family offices. So they're
Yeah.
diversifying their portfolio or their entire wealth is what probably is happening. And some of the good companies where these kind of blocks from promoters are coming, when the company balance sheet is strong, they are on a growth trajectory. I don't think that is a necessary evil. And still, it gives the required liquidity to the markets also, because if every month mutual funds keep getting 25, 28,000 crores, this kind of liquidity helps get the right investment opportunity also. So it's not a necessary evil, if you ask me. And the money is not largely going out of the markets.
Right. Yeah, that's an interesting perspective to view it from because, there's a lot of talk around how promoters are selling because they feel that they themselves feel they are overvalued, right? And a lot of the times they do try to hedge their bets by diversifying into other asset classes rather than
Correct.
staying invested in their own
Correct.
companies.
But coming back to your call on Warren Buffett, what you said, so typically
Yeah.
we have seen in so many market cycle when market cap to GDP hits 200% is the time every time markets have corrected.
Yeah.
So US markets are at that. But also my take to some extent over there is that US market doesn't represent just US GDP. Most of the companies, and particularly heavyweight tech companies, are absolutely global in terms of their business model. So they
Yeah.
represent the global GDP to some extent, and that's how they are much higher market cap to GDP ratio. But when India is also touched, almost 140, 150% market cap to GDP, I would think that that's also a sign we need to take it with a caution. So, caution at this juncture and sticking to quality, back to quality, is a very, very important thing to do at this juncture.
Yeah. I think the interesting insight there was that, a lot of the growth which we are seeing in the economy is actually fueled by government spending and not actual growth on the businesses side, right? While the businesses are growing, but the government investments are what is driving some of the larger macro factors, which once the dust settles, you'll be surprised to know the kind of growth numbers that actually exist, right? So the larger narrative around India is very positive, and I am also a big bull on India. I think so are you. You've had this multi-decadal growth story, and you've always believed in the India story. So, what do you think within? What are some of the sectors which are poised for growth? What are some of the services or companies do you think are going to benefit the most in this market cycle in the next wave?
So, some of the things, while answering this, which I would like to say is that India fundamentally also is at a sweet spot. Government balance sheet is strong, banks balance sheet is strong, corporate balance sheet is strong, and till now individual balance sheet is also strong. So typically the balance sheet which gives you the strength, and it's profit and loss that reflects your growth. So even if earnings may taper a bit, the overall balance sheets are very strong. So that's
Right.
how a lot of strength or the confidence comes in the markets. Correct? Beyond that, there is actually a lot of work which has happened. I have seen markets, as you know, for 2.5 decades, and many, many sectors. When I used to meet corporates, every time they would be hopeful of some reforms in the business coming in. For example, railways, for example, defense, for example, power, for example, renewable.
Right.
For a decade, no business came. Correct? Now is the time when all the things are put in place. When we say governance, so which is put in place. You see the kind of orders which are coming in railways, in defense, in drones for survey. So everything which we are talking PLI, and you'll be surprised the kind of work which is happening in shipping sector. So this is an
Yeah.
absolute top-down approach that where India, in terms of its GDP composition, its service composition, its manufacturing composition, is not there. What is lacking? How do we make policy changes which facilitates this growth? So this is a different India for sure. And because of that, and the combination that we are the youngest country demographically, so we have so many earnings member in our family as compared to
Yeah.
most countries where people are dependent. So this is a lethal combination. So the upcycle in the markets will not change. But bouts of corrections will come. And one needs to have that ability to weather these corrections. And beyond that, navigating markets is always about your ability to find the right uh, business to back. So,
Right.
so, so General Rush has never made huge money, frankly. Having said that, you said which are the sectors? So, in this phase of the market, where large growth is coming in capital goods and infrastructure, we believe that this growth will continue for a decade, but we also believe that for the time being, a lot of thing is discounted in the valuation. And valuations are not offering us a place to error, for a delay. So if I want to build now, I go overweight in not just being defensive, but we feel that a lot of pain has come into pharma companies in last 3 to 5 years because of US market changes. Having
Yeah.
weathered that, they are now set for upwards of 20% growth, equal to maybe in some select cases 25-30%. So that's a good space. It is under owned. That can give a good returns from now. Also healthcare, as the our living standards continue to increase, our per capita transacts from 2,500, 600 to maybe 4,500. Of course, our desire to be $12,000 and above. Healthcare
Yeah.
will be an extremely interesting sector. Diagnostic also has a base effect of all the pain. So these are the pockets which I think could be overweight on. Apart from the fact that there are interesting avenues in terms of even some of the hotel stocks, because the whole trend is about experiencing, and
Yeah.
both business and leisure travel has increased substantially. So even that sector can continue to give very good returns and CAGR. So we continue to look at a core portfolio and a satellite portfolio. So core portfolio
Right.
continues to have some of the large franchises, while satellite portfolio can continue to move a bit in terms of being overweight and underweight.
Got it. And those are very interesting insights that anyone should look at, whoever is investing in the market, because the sectors that we previously backed on and invested in heavily, I think, are showing slowdown signs, right? Like everyone's talking about how everyone's selling HDFC stock, which has been a wealth generator for so many people. And coming to, the retail participation again, between 2012 and 22, you grew PL's retail business 10x. What are the major shifts that you've observed in retail investing behavior in India, especially post pandemic? How has PL Capital adapted to meet the new retail investors' needs?
Sure. So, the retail investor has been the real game changer for India, and they have weathered through their savings the onslaught of selling by FIs also in last 5 years post COVID, as you know. So that has been a real game changer. Within that also, I think the key change which has happened is the new lot of investors, the young generation investors, are not only tech savvy, but they read. And there is a lot of
Yeah.
proliferation of all the social media where you have access to explanations, education, reading, understanding, learning, individual language learning, or listening. Because more than reading, it's the listening which is very easy to catch up to and develop some understanding. So one definite thing is that this is really very welcome change which is happening. Now, from the positioning perspective, PL Capital as a group, our average revenue per client is about 20 to 30,000 crore, 30,000 rupees, as compared to most of the tech platforms whose average revenue per client is between 2,000 to 4,000 rupees. So my client base is very different. I I do
Right.
give them digital fulfillment, but these are advisory led clients, which means that, and my large client base is not between a 15 to 32. My client base is largely between 30-35 to 45-50, who have become really busy with their own careers. So they need that expert advice. They leave it to them to some extent and then participate. So our model is digital, where we have about 1,300 franchisee partners across India, who themselves are mini PL, and then within their own network they give our research advisors. So we do offer DIY platform, but largely our model is advisory based.
Right.
And within that, we have also, to our lovely surprise, seen that there is both the class of investors which are existing. While there was complete onslaught and disruption, and people started thinking that brokerage is the biggest cost. So zero broking cost and discount broking has proliferated. There is a
Yeah.
huge value for advice. And our gross yields have remained same since 2016 to 2024. While we grew 10x, in this discount broking era, people do realize value for advice. So we are sticking to our core offering, that we want to add value in whatever we do. We do not want to be just a platform company, but people are bringing their hard earned money and savings. And if we can add value, and that could be not only through research, most of the time it is through the mental framework, which makes big money for anybody. And so the both combination, if we can add value, be it our retail clients or funds management or advisory clients, we continue to trade that path. But in all the businesses, we have added the digital fulfillment, which is at par with the best that can be offered.
Those are very fascinating to know that, some of the most fundamental decisions in a business is choosing your target customer, right? In your case, you've gone for the people who have the disposable income, and that to very large segment where, they are willing to invest very aggressively at that stage in their lives. And then you've also chosen a business model which has very high margins, right? I think the asset advisory business is a personal favorite of mine in the wealth management space, because you can make so much money doing, no, obviously you do a lot of work, but compared to the other platforms and businesses, like this requires significantly less effort once you've established that brand and credibility. So as the person who's leading this in charge, what were some of those decision factors for you that you decided to focus on a particular segment, a particular business model? How did you arrive at that? Because a lot of founders who are starting up in the wealth management space will be looking at the macro picture, saying that this is a good time to build a business in this space. But the fundamental decisions are very important, because the segment that you start with or the business model that you start with needs to be revenue generating, profitability needs to be in focus as well. So how did you arrive at that free cash flow generation for yourself?
So all the business secrets to be on the table.
Whatever you are willing to share.
No, no, of course I will share, because most of the things in part lies in strategy, large lies in implementation. So that is any which
Yeah.
way uh, to be navigated. But I was just looking at the whole space, and where on the top there are large family offices, meaning the investable surpluses upwards of 200 crores to say 2000 crores to 10,000 crores. These family offices can always have the ability to hire a professional to look at their investments. Once
Yeah.
you do that, their readiness to pay reduces even further. And they have in house capability to allocate or understand markets. So, here once again, as a house, we have decided to approach with our very distinct manufactured products, which means, as what I said, quant based PMS or quant based AIF. So, which gives a very distinct edge. And there are specialized deals which we bring from wealth perspective. So, we don't want that for a 500 crore corpus, I'll run around and take a 10 lakh fee and add my corpus, saying that I have a large AUM. We don't want to chase anything in life. We want to add value. But as you see, there is the entire mass affluent segment which still needs that hand holding, which is say from a 50 lakhs to 5 crore to 50 crore, who have the investable surplus, maybe not that much knowledge, maybe, of course, not that much time. And that's the segment we want to really focus from our wealth perspective. And the
Right.
mass of the bottom of the pyramid, the real retail, we don't want as a platform to encourage them to keep doing FNO. It's okay, but we don't want to encourage. So in future, as a plan, we want to have our quant-based mutual fund. So when we get their savings, we really help them grow that in a more structured, dispassionate in terms of being non-emotional, and we add alpha to what markets are doing. So this is the broad strategy that we have created for our businesses and how to address the different segments of the markets.
That's amazing. And, now that you've been at it for 35 years, what's the North Star that you are working towards? What's your personal ambition for PL Capital?
I think two things, I guess, that one is that year after year for last 3 years, we've been awarded by Economic Times as the one of the most respected brand or best BFSI brands. So that's of course very satisfying. Last year, Jamnalal Bajaj awarded us for one of the most fair practice business award in the financial segment. So which was 2 years back being got by HDFC. So that also is very satisfying. But I think that to do the real justice to the brand, we need the size and the scale. And that's what
Yeah.
I really want to achieve. And from financial parameter perspective, we evaluate businesses saying that you put money into any fixed income, you get 6, 8, 10, 9%, you take less risk. You put money into markets, you search businesses with 18, 20% ROE. So if I can really do a business which is upwards of 25% consistent ROE, I'll be very happy. B, I turned a professional to an entrepreneur. So I owe a lot to the team who's giving me the time of their career. And if I can make, in turn, each of my businesses being, fully empowered to these professionals, they participate in equity with me and grow that. That'll be the second satisfaction that I'm looking at.
That's true visionary stuff right there. But is there a number in your mind that you are chasing?
Yes, I do. We want to be by 2028, 29, or maybe 30. We want to be at least, I would say, $1.5 billion organization, which is what the kind of wealth and value that we want to create. And there's
I
no
always
path that
ask
we have
my
drawn.
That's amazing, because, I love asking people and guests on the show this question because, in some ways we are helping you manifest your goal. So more power to you as you work towards that mission.
Thank you so much. Thank you so much. It's lovely.
Amisha, I always ask this question. This is the famous regret minimization framework that Jeff Bezos follows, where he looks at himself at the age of 80 and takes a lot of life decisions backwards, thinking about what he would think about those decisions at the age of 80. So, reflecting on your life journey, what profound insights do you think you would have at that point? Specifically, distill it into one significant learning, one regret, and one pivotal life decision.
One significant learning which I need to imbibe and work on is the ability to say no. I think that I've been pretty weak on that, and that's a very critical ability to just do that. That saves a lot of time, energy, gives you a lot more space, clutter free mind, and it encompasses every aspect of your life, be it personal, professional, and so on. So that is one weakness that I've identified, and I would have, if I would have imbibed that early on, that would have really helped me substantially. You said that what is that one more regret that I
One
have?
regret and one pivotal life decision.
This is recorded line.
One pivotal life decision was that starting PL Capital.
Yeah, certainly. 100%. But one regret, I will just give me a few minutes to think. I think what comes in my mind automatically is something which I may not share, but let me think.
Sure. Yeah.
Okay, something could be interesting. So, so one regret that all throughout my professional career, I had that guilt feeling throughout that at some age maybe I didn't go to sports day of my son. At some age, I didn't go for dinner with him. But throughout, I was always focused as far as his other needs were there. Also, to my satisfaction, that I should not have had that guilt because children learn the most by what they see rather than what they hear. And
Yeah.
probably somewhere he saw that passion, that sincerity of efforts, and I'm so happy that my child today, my son is also 31 now, but touchwood, highly educated, having three professional degrees, spearheading a completely different innovation in investments world in India. And so this is a key message I would give to most of the working women in whichever capacity, that we always juggle between our role, which has been traditionally defined in our minds, and it's a fact also that we are much warmer, much more sympathetic, you know, human beings. So we're more aligned to our that role as mother, as wife, as homemaker. So, but when you're sincere, I think your child, your family members, they all know and they understand your sincerity. So, one that I should not have gone through that period of continuous guilt, which may have resulted in some little health issues for me, but that is one thing. I think second important, you said game changer decision, right? What was the third
Yeah.
question? What is
Pivotal
that?
life decision.
Pivotal life decision. I would
The
definitely
question is
think
to make
so.
the guests think. So I think we are
I
doing the
know.
job.
So you're very happy with that. So, so many decisions for a long continue to make you think that how good was it that decision? But I think for me, a pivotal life decision which helped me reach this stage is my decision of my marriage. I married to a person who, in my vision, was married to my goal, for whom, even those days, my goals were, my desires were important. If I would not have done that, and if I would have married to, with those typical lens, who's very well established, who's very
Yeah.
well settled, I am highly educated, I can get this, that. So I didn't allow any of those, to be very frank, easy way out or grid to enter into my personal decision. And I think that proved so well, because this kind of a career in a financial market requires complete dedication and support from all the family members. So it's only when your
Yeah.
partner shares the same vision that it gives you wing, it gives you ability to really do that what you want to do. So I think that was my best decision.
Amazing. I couldn't have asked for a more beautiful note to end the episode with. Thank you so much, Amisha, for taking the time out. I think, this message is so powerful for any working woman. I'm a new mom myself, and just hearing you say that, don't feel so guilty about, prioritizing your work when you need to be able to fulfill yourself is very, very important for every young woman to know who's thinking about becoming a mother someday. And,
Correct.
the decision to marry, right? I think, that is one of the most empowering decisions that someone can make, be it a man or woman, right? So, what a beautiful note to end the episode with. And you're such a trailblazer. So, I wish that, at this age, at least you would have stopped regretting some of the things that you did and, dealing with that kind of guilt. So, more power to you for achieving the kind of things that you have done. And you've truly had a path breaking career. So, all the best for what lies ahead.
Thank you so much, dear. It was a wonderful thing and wish you all the very best.
Thank you very much.